Hi, this is Arvind from ChartView Research and Analytics. Today we are going to discuss on market for 22nd April Friday, the post-market analysis for Nifty and Bank Nifty. As you know, we are forecasting charts for Nifty and Bank Nifty. In 60 to 80% cases, it is matching, but some cases it is deviating. And nowadays, the volatility of the market has risen very much. So, as per demand of the people, we have started our post-market analysis from today, which will give some insight of the market why market movement was so in the day. So, before going deep into the topic, I would like to share some ideas on the market. That market is very vast. It is influenced by a lot of parameters from financial, economic, political, business results, and emergency events like COVID and war situation continuing in Russia and Ukraine nowadays. So, before going deep into topic, also I would like to convey that we are using a lot of indicators, lagging, leading indicator to know the market, but sometimes these indicators are failing. A lot of people are analyzing market, also their analysis failing. Sometimes it is gap up, the next day gap down, someday flat, and the volatility has risen so much that if you will see for a 2 3 months time period, we are at the same way. So market is moving nowhere. So how to trade in this type of market? So it has a topic of hot discussion nowadays. What uh, I would like to convey some ideas about the market analysis on day-to-day basis and apply some techniques, so which can be helpful to you for intraday trading. Like we are forecasting the charts by our algorithm and logical analysis and quantitative modeling. But how we are doing it? Market is a very vast things, and there are future instrument, option instruments, stocks. So index is a combination of stocks. Bank Nifty is a combination of banking stocks. So these stocks play a very vital role in the index price movements. But index is also based on option and future side. So the option and future data also play a very vital role in the price movement of the market. In option chain, you have to see a lot of things. For any newcomer or any people who are also trading in the indexes, they also knowing the option chain. Option chain play a very vital role because there are put option, the call option in the same strike. People are betting that it will go up. Some people are in the same price. They are betting it will go down. The topic is very interesting. But we have to see the parameters, the open interest, the premium, and different straddle strangle formation in the option chain. Like some straddles are forming, some strangles are forming. So which strike is important, that we have to see. As for our market analysis, we normally focus on uh, short straddle side because the writers are the powerful people in the market, as you know. uh, a buyer is in less powerful, he wins only 30% times, but writers win 70% times. But sometimes buyers also make money, and sometimes writers also lose money. So the thing is that you have to take the right step, right entry and exit in the market. So how will you do it? You may be knowing the famous short straddle method that is used normally in the market. The break even, upper break even, lower break even. If there is a short straddle formation, the price may move between the upper break even and the lower break even. But from the straddle data, we have also debating our own resistance and support corresponding to the same strike. It is not break even because break even is values are different from our values. So we are deriving these values corresponding to a strike, applying some algorithm and quantitative modeling based on the historical data. So first, you can see here there is a writing 36500 ps, that is in power support. It is the, if you will see in the option chain, it is a straddle formed, hash straddle from 36500 for bank nifty, and the second straddle was formed at 37700, that is I have written s2. So these are the lower limits. The green value represents the lower values. So 3700 S2 that represents 36423 and 36500 PS represents 36094. It's the lower value. But on 22nd, what happened for Bank Nifty? It opened exactly near the 3600 strike price. So what is the upper limit, lower limit corresponding to 600 we have to see that. You can see from the chart here in my indicators that the lower limit was 36,256. So after opening, it just touched that line and again bounced back, and again there was a strict resistance for 2 hours near 3700 423, and after 12:45 gradually there is a decline of the price, and it just touched again 36256. There was a possibility that it should move from this place to this place again, or it may touch this, but it didn't happen. It broke that line and it touched the uh, pastoral lower limit. So market moves in that manner. Here I would like to clarify that the opening was itself very weak on that day, because it was a gap down opening, partial gap down. Also, the open was high. It is also a strategy. If open is high is maintained for 1 hour period, there is possibility that the price will go down. But it should go with a reason. It doesn't, because it was getting a resistance over here, 36423 value, and there was a resistance here, and gradually it touched the first hurdle lower limit. So in this way we analyze our market, and again we will now discuss on Nifty how it moved on that day. Basically, we use one or two lagging indicators. We normally use MACD, that you can see in this chart. But better not to do use not to use so many indicators, and focus on the price movement. The price action. What is price action? Price action is the movement of price over a period of time. You may follow different time frame, 5 minute, 15 minute, 1 hour, but we are following our 5 minute chart pattern. But why price is deviating from a level, that is important. That we have to know what is the reaction point, and that we are calculating. Now we'll discuss the movement of Nifty on that day. So we'll go to Nifty chart. Here you can say there was a gap, very gap down opening. You can say Nifty opened around 17,250. Okay, so from 17,250, the lower limit was around 17,156. On that day, the powerful straddle was formed on 17,500, whose lower limit was 17,293. It opened just below the 17,250 point. So already it was a weak point. There was a possibility of shoot up from this part, and it got shoot up. There is a support from this place on 21st, so it shoot up. But where again there is a resistance at the main straddle low limit value, we can say here. You can see here this value. So market actually rejected the first straddle support, and got a resistance here. And definitely, if it is getting a resistance in the first straddle, it will follow the second straddle value, and that was 17,150. So this is the technical. Actually, the day during the start of the intraday, or during the starting of the day, where it is opening, that is very much important. If it had opened here above 17,293, then there was a possibility that again it will has to touch this line, but it didn't happen. It just went on its own, and there was a huge resistance at the support of the high straddle, that was 700, 1700, 500. That is the high straddle formations. So now we are going to design some product on price levels for different strikes, and we'll publish it soon in our website. And but now from now we are going to give post market analysis on daily basis, which you can see by our channel, Chatvi Research and Analysis channel in YouTube. Thanks for watching, and thank you again.